Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, the 6th day of July 2015, and this is Trending Markets. As we spoke about in the gold forecast that I recorded just earlier, there was a vote on Sunday. We saw fireworks not only in the USA but overseas in Europe. The Greek government presenting a proposal to the constituents, to its citizens voting no, not to accept the current austerity programs that are necessary to continue getting money, and what will happen is anybody's guess at this point, but one thing we can say, it will lead to more uncertainty and it will lead to potentially more volatility within the markets. Of course, it's been our belief that we would see some downside pressure on the euro, upside movement in the dollar. We talked about crude also. We'll talk about all of that on today's show. But the first thing that I do want to do is take a look at the euro. Euro currently trading off about 58 points on the day. It's at 110.56, so it has moved further in our direction. We're short roughly at 111.50, 111.60 in that area. As I said, my current target, my current goal for this particular trade is still around 108, but we'll have to see how all of that pans out. We're also seeing this nice return to the dollar. A dollar currently trading up 96.24. When we take a look at our daily chart, and let's go ahead and just take a look at the chart alone, you can see that on our daily chart, there's no doubt we hit higher highs than we ended up closing at. You can see that by this long tail right up here, but we still have closed substantially higher than the open. I would have liked to seen it really move above these most recent highs that we had last week, and we're just shy of that. I believe that's around 96.45, 96.50. I would like to see that, but in lieu of that, we certainly have this market moving and moving to the upside. When we incorporate our MACD, moving average convergence divergence, you are noticing that we are getting a widening. That widening, of course, is telling me that the strength of this trend is continuing to kind of grow a little bit, and you can see that with this momentum index right up here. And yet another view of that is to convert our basic daily candlestick into a Japanese average, because that's going to give us yet another way to view strength of trend. And although we do see the trend strengthenings in the MACD, we're not getting that same corresponding information out of a Japanese average chart. Of course, the key difference is we're fixing our open as the midpoint of the prior candle, this being the prior day on a daily chart. So the body size isn't really that immense. It's not a really small pivotal, what we'll call that doji-like candle, but it's certainly not a large green candle that shows us that the trend is absolutely intact, and if anything is building steam, not losing steam. Now, in terms of different areas that we want to look at for strategic exit strategies within this long dollar play that we have, I draw your attention to this series of tops right here. When we look at these tops, and I want to really focus on the bodies more than the actual wicks, the wicks being the highs, but when we look at the bodies, and let's try to get a corresponding number to these bodies, you're looking at around 97.40 here, 97.28, and I'm just trying to look at the tops, maybe 97.32. So anywhere between, call it 97.20 and 97.50 is where we could see some resistance come into the market. If that's the case, we can either look to tighten stops or we can look to pull profits on that trade, but we've got to get there first before there's any decisions. One other thing that we can look at when you consider these bottoms here, they're not going to come into play, or these tails down here, but when we look at some of the bottoms, it's going to give us yet another level that's a little bit below it, because one man's resistance is another man's support. Longtime subscribers know that the way I look at support and resistance is if you're on the second floor looking up, you see a ceiling. That ceiling, of course, is resistance, but if you're on the third floor looking down, you're looking at the very same structure, and that is support. Support and resistance are always part and parcel of the same thing. So we could see a little bit of resistance in this area here. So this is kind of the zone, so to speak, between these 2 points here that we want to look at to see if any kind of real resistance enters the market and then act accordingly, as I said, right within this particular price point. You know, traders, last week we talked about the fact that I truly believed that we would see some real weakness in the crude oil market. We certainly got that today. Look at these prices down about $4, a 7% drop. A 7% drop in the marketplace in one day. Now, a lot of that has to do with the strong dollar. As long as the dollar's strong, these commodities that are sold and priced in dollars, oil being one of them, gold being paired with the dollar is another one, they're going to have a lot of pressure to overcome to move up or even stay the same. When we look at some of our charts themselves, you can see we talked about this throughout last week, and that was that I really felt we saw some consolidation at 60, and I really believe that we were going to see a break lower. We certainly got that. We certainly got that today. So traders, assuming that this downside pressure is going to continue, I really have to look at it as part of a counter trend. And here's what I mean. Right now, my current count is we have this long wave 3 down. We are currently in wave 4, and as you can see, our system is saying that that could take this market a lot higher, although we have the market under pressure. So one particular way to look at this is as follows. We completed, there's our fifth out of 3, so we complete our wave 3. Here we have no side count yet, so the count I'm looking at is going to be our A, and we are currently in our B wave. Now, typically a B wave will go anywhere between 50 and 75% that of A, and then you'll go into a final C wave up. C wave up would hit your target here, and then from there, that would complete 4. Wave 5, though, would bring you a low that's below this, and that's my long-term view of oil right now. In other words, what I believe we're looking at is that the market has currently come up. That is our in terms of 4, here's our A. We're now in B. B has taken us in a one-day move. Look at how the low matches exactly to this 50%. So this, if the market comes back up, this would still be what would be called a valid B wave, because as I said, you're looking for the market to really go 50 to 75% that of the preceding wave, or the wave that came just before that. And so it could go as low as 47.83. It could stall out here, and if this really unfolds with a true wave count, that won't complete it, because this would be our A, our B, we would get a final C, that would come up to some sort of target here, and then we would see really a meltdown, because you would then go into a fifth wave. 5 tip is simply being equal, though, to 1. I don't know where that would plot us at. That would be something we would look at a later date. So traders, considering what we saw in the marketplace last Monday when there was turmoil in Greece, we saw our markets trade dramatically lower and close on the lows down 350 points. We certainly didn't get that today. Dow Jones Industrial Average down, but down only 46 points on the day. The low was much lower than this. When I was looking at the markets as they traded overseas last night, they were down 200 points on the Dow Jones futures, or projected futures, I should say, with a corresponding tremendous drawdown in the Standard & Poor's, the S&Ps. That was not to be the case, as we saw it trading dramatically lower on the day, but really closing well off of those lows. This has been Gary Wagner, wishing you, as always, good trading. Maintain your short euro, your long dollar. We'll talk about whether or not we still have an opportunity for crude later on this week. Bye-bye.